A very good evening to all our viewers. This is WION Wallet. I'm Sumit Chaturvedi. Let's go straight to our top headlines. US President Donald Trump's ambitious plan to cut corporate taxes could benefit India, and other emerging markets could also benefit as well. Air travel set to get cheaper in India. Prime Minister Modi flags off first Udan flight, which may cost as little as 2,500 rupees per passenger per hour. South Korean carmaker Kia has announced it will set up its manufacturing plant in India's Andhra Pradesh state. There will be an investment of $1.1 billion by Kia Motors. And the World Bank has kept its crude oil price forecast for 2017 unchanged at $55 per barrel. Now straight to our top story. Making air travel more affordable, Prime Minister of India, Narendra Modi, has inaugurated the ambitious Udan flying scheme today, aiming to help people to fly cheap to small towns. Now, PM Modi flagged off 3 flights from Kadapa-Hyderabad, an airport on the outskirts of Shimla to Delhi, Kadapa-Hyderabad and Nanded-Hyderabad sectors. Well, the flights will be operated by regional arm of Air India, Alliance Air. Air India had opened bookings on Tuesday for the first launch flight from Shimla to Delhi, with all-inclusive fares starting at 2,036 rupees. Under the scheme, the airfare for nearly 50% seats has been capped at 2,500 rupees for a 1-hour journey of 500 kilometers. Now, 5 companies will operate flight services on 128 routes that will connect 70 airports across the country. Let's hear what PM Modi had to say on this.
हमारे देश में गरीब व्यक्ति की एक पहचान है, वो हवाई चप्पल पहनता है। और मैंने उस मीटिंग में कहा था कि मैं चाहता हूं कि हवाई जहाज में हवाई चप्पल वाले लोग दिखाई दें। और आज ये संभव हो रहा है।
Now, to talk more on this issue, we are joined by Amber Dubey, partner KPMG. He tracks the sector very closely. Good evening, Mr. Dubey. This is Sumit. I would like to ask you, first of all, how is it going to benefit the overall aviation sector in India? How will it fuel the growth, or will it fuel the growth at all?
Yeah, thank you so much for having me. I think it's a red letter day for the Indian aviation. This has been in the works for almost 2 years now, since the June of 2015. When the whole policy was being drafted. This will help us to take aviation to the masses, because that's where the real growth is. Because in the urban areas, if you see Delhi, Mumbai, there's a huge capacity constraint. Some of the larger airports also are going to face capacity constraints. And the real population is actually in the interiors where there was no connectivity. And the reason was that it was unviable. So now the government is saying, okay, fine, if it's unviable, we'll give you the viability gap funding, and we'll give you some more sweeteners to add to that, which makes it worth your while. And please start serving there. And based on this, the whole bid process was managed. And now we have, the market has spoken, and 5 airlines have come in, 128 routes, all the other facts and figures which you shared. So I think this is a great step forward, and this will only bring that revolution that we were waiting for. Is going to happen now. So
Mr. Dubey, are we the only country in the whole world where this scheme is applicable, or some kind of this scheme is applicable across the other countries of the world as well, or are we the first one to start with this?
No, frankly speaking, there are other countries, and when we were discussing within the ministry about these issues, yes, there were case studies that we looked at in larger geographies like Australia or Canada or US. They have similar schemes in which they run the contracts, and they pay compensation to airlines to operate to those remote communities, because these are also very large countries with many remote communities with very low population, which makes it unviable for regular services. So this is done, but nothing is on the scale of the one which India has tried, the number of airports, the number of cities that they're going to touch, the amount of population that's going to come in, and this direct subsidy where every seat that is being deployed, people are given the viability gap funding. and for 3 long years. And on top of that, the operators will also get a 3-year exclusive rights to operate on those routes. So there are certain unique features which are not there in the world. But yes, there are other countries also which are doing it, from which we took inspiration from.
And Mr. Dube, for the benefit of our viewers, can you put forward what is the mathematics behind this kind of scheme, or why this scheme was not there earlier, and how, will it lead airlines to suffer losses at all or not?
Yeah, the mathematics is very simple. The whole idea was to bring every cost item down for the airlines which are operating to these locations, because let's face it, because of the lesser demand, lesser affordability and lesser demand in the smaller cities, you cannot operate a 180-seater aircraft there. So it's typically going to be 80 seats or less. Now, what happens is if it's a 9-seater or a 19-seater or even a 40-seater, the salary of the pilot doesn't go down. The salary of the cabin crew doesn't go down. So you still need 2 pilots and so many cabin crew. And for the 2 pilots' salary, if it's going to be divided amongst only 9 passengers or 19 or 20 passengers, you can imagine, versus a 180-seater aircraft, it's not going to work out. Secondly, the bigger problem is that because these are smaller aircraft, many of these small aircraft, the speed is very small. Speed is much, much lesser than the high-powered jets that we have, which take 180 people. So the number of flights in a day, which is called sweating the assets. So the number of flights per day is also limited to that extent. So your number of flights are reduced, the number of seats are reduced, so naturally the cost per seat goes too high. Now, if those costs per seat, if the people cannot afford, I think some third party, which is the government of India, has to step in. And that is what the overall scheme is. There are various, I'll not like to go into all the details, because there is a whole list of tax benefits on excise, on the VAT, on service tax, etc. There's a 3-year exclusivity, and then the police and the fire brigade services come free of cost instead of using CISF. So there are various line items which the ministry and the stakeholders work together and came up with this scheme. So this scheme is not just from the government, but there's been a huge involvement for the first time, and this is where we felt very good, was there's an extreme level of engagement with the private sector, and it's a joint product between the government and the industry to take flying to the masses. Sumit?
Absolutely. Thank you, Mr. Dube, so much for bringing us all these details and decoding the mathematics behind such an ambitious scheme. Well, moving forward and moving to automobile world, South Korean car maker Kia has announced it will set up its manufacturing plant in India in the state of Andhra Pradesh. There will be an investment of $1.1 billion by Kia Motors in India. This has been announced today only. The company has signed a memorandum of understanding, or MOU, with the state government of Andhra Pradesh to build its facility in the Anantapur district. Now, the sprawling factory is spread across 536 acres and has facilities for stamping, welding, painting and assembly besides the main factory. The site will also house the ancillary parts factories to facilitate smooth operations. Now, construction of the facility will commence from the last quarter of 2017, and Kia expects to begin production by the second half of 2019. The plant will have a capacity of approximately 300,000 cars annually. Kia will start marketing its cars in late 2019 only. Staying with the auto space, where Volkswagen Group is considering a possible sale of Italian motorcycle maker Ducati, as Europe's largest car maker seeks to streamline operations to fund a post-Dieselgate strategic overhaul. Now, Volkswagen is reining in spending across all areas of group-wide operations, including by cutting thousands of jobs at its core passenger car brand to fund a multi-billion euro shift to embrace electric cars and new mobility services. Now, Volkswagen has tasked investment banking boutique Evercore with evaluating possible options, including a sale of Toro brand, this brand particular, which its luxury division Audi acquired for about 860 million euro in 2012. Now, the motorbike maker Ducati may appeal to peers such as Chinese groups and even India's Hero Moto, or investors such as Consortium, which bought British car maker Aston Martin in 2007. Now, Pakistan's key ally, China, has come to its rescue to help them stave off a possible currency crisis. Yes, it's true, China has come to the help of Pakistan, Beijing has increased its economic pull to Islamabad by giving over $1.2 billion in loan. Now, China's financial help came as a major boost to Pak's economy as imports have increased and inbound remittances have fallen. Well, this also came at a time when as US-Pak relations are not at their best and voices have often been raised against aid given to Pakistan by the US. Now, figures from State Bank of Pakistan revealed Pakistan's net reserves dropped to $17.1 billion in February from $18.9 billion in October 2016. Now, according to the report, this has caused Pakistan to seek emergency loans from outside sources to pay off previous debts made in foreign currencies. Staying with China, where China's consumers' uptake of 4G services showed no sign of decelerating in the first 2 months of 2017 as the big three operators added 45 million 4G connections to take their total to 807 million. Now, market leader China Mobile added 24 million 4G users in January and February, taking its total to 559 million users, while China Unicom picked up 11 million and China Telecom signed up 10 million 4G subscribers. Now, the country's 4G penetration stood at nearly 61%. The three Chinese state-owned operators' revenue increased 4.6% to around $21.7 billion in the first 2 months of 2017. The SMS volume of the subscribers dropped 3.4%, while China accounted for 40% of some 2 billion global 4G connections at the end of March, according to GSMA intelligence. Now, straight to US, where US President Donald Trump's ambitious plans to cut corporate taxes in the world's largest economy would be a major boost for US companies and the dollar, but India and other emerging markets could benefit from it. Let us see how.
This could be the biggest tax reform in the history of the United States of America. And if US tax rate cut proposals brought in by President Trump are legislated, US companies would go from being the most highly taxed among the group of 20 countries to among the lowest. Trump proposed slashing tax rates for businesses to 15% from the current 35% for public corporations. Overseas corporate profits returned to the country will also be taxed at 15%. Now this could urge US companies to bring back money parked elsewhere to the US, though analysts point out emerging markets including India may not be hurt as badly, and on the contrary, emerging markets would actually benefit from the proposed tax cuts. More money in the hands of US companies would lead to more investments in emerging markets, which carry huge growth potential. Emerging markets could see increased foreign direct investment. Currently, while the corporate tax rate in the US averages around 35%, in Switzerland it is 8.5%, Hungary 9%, Germany close to 16%, Britain 18%, Australia 30%, and India corporate tax rate averages around 35%. But Trump's proposal will still have to go through Congress, and analysts believe the deficit in US economy will be so large in the absence of tax funds that such proposals will be short-lived. With Sumit Chaturvedi, Kartikeya Sharma for WION.
And in yet another US stir, the President Donald Trump has said he had no immediate plans to scrap the North American Free Trade Agreement or NAFTA. Now, Trump has conveyed this to Canadian Prime Minister Justin Trudeau and Mexican President Enrique Nieto during telephonic conversation between leaders on Wednesday. While Trump agreed not to terminate NAFTA at this time, instead Trump said he would renegotiate on the trade accord. Now, the decision came on a day when senior administration official revealed that White House was considering an executive order to withdraw from the trade accord. Trump had been quite vocal about his opposition to NAFTA during his campaign days. He had said agreement was a raw deal for the middle class. Now, the World Bank has kept its crude oil price forecast for 2017 unchanged at $55 per barrel, as it expected prices of industrial commodities to continue to rise this year and next year as well. In its latest quarterly commodities markets outlook report, institution forecasted that crude oil prices will jump 25.7% to reach $55 per barrel in 2017. The projection is unchanged from its previous forecast made in January. It expected crude oil prices to grow 8.2% year-on-year to an average of $60 per barrel in 2018. Now, the rising oil prices will be supported by production cutbacks by members of Organization of Petroleum Exported Countries or OPEC and non-OPEC states, said the bank. But it also added that those forecasts are subject to downside risks if U.S. shale oil production recovers better than expected. Now, it forecasted their prices of energy commodities will rise 26% this year and the growth rate of price will slow down to 8% next year. Moving to aviation space, where China Southern Airlines company plans to buy 20 A350 wide-body aircraft from Airbus in a deal worth about $6 billion, providing a boost for the manufacturer amid production delays and order deferrals. Now, the Guangzhou-based company, which ranks as Asia's largest airline by passenger numbers, will take delivery of A350 and 900S starting in 2019, with all of the planes to be handed over by the end of 2022. Now, the deal for A350s, which are priced at $311 million a piece, but sell at a discount for large orders, comes amid delivery holdups linked to a shortage of interior fittings for the model. The biggest US carriers have also cooled on the plane, with American Airlines Group last year deferring delivery of 22 jets by an average of 26 months, and United Continental Holdings saying it may swap its order for A350-1000S to a smaller aircraft as well. Staying with aviation space, where United Continental Holdings will offer as much as $10,000 to passengers who voluntarily give up their seats on oversold flights, one of the 10 changes the airline is adopting after a customer was dragged off a plane by security officers earlier this month. Now, the carrier will also reduce the overbooking of flights and refrain from calling in law enforcement officials unless safety and security are at risk. United issued the changes more than 2 weeks after forcible removal of David Dow, a 69-year-old passenger who refused to surrender his seat by Chicago Department of Aviation officials. United is still dealing with brand image and damage and other fallout from April 9 incident and faced another round of negative headlines when a giant rabbit died as it awaited a connecting flight after arriving in Chicago from London, as United said it's striving to become a better, more customer-focused airline to win back public's trust after a worldwide furor over Dow's treatment and calls from some politicians to crack down on industry with tougher rules and legislations as well. It is time for a short break on WION Wallet. After the break, we will continue with our coverage of markets. Stay tuned to WION. Welcome back to WION Wallet. After the break, straight to our market segment, where Indian markets have consolidated their position today, while European markets were trading in red. If we talk about markets, Sensex was down by 103 points around, and Nifty was down by around 9 points, while other markets, as far as Asian markets are concerned, were trading. We can see that Nikkei was down by 0.20%, while Hang Seng of Hong Kong was up by 0.49%. These were the situation as far as markets are concerned today. Now, we are joined to talk more on market with Saurabh Jain, Assistant Vice President of Research, SMC Global. Well, good evening, Mr. Jain. First of all, what do you make out of this kind of reaction we saw today? Markets were really going up and up the end before yesterday. Today, they were down. Why so?
See, we have seen a good run-up in the sense that 2-3% indices gain were locked in the current week. Because of the expiry, the volatility cannot be ruled out, and we saw this volatility in the markets. Actually, the foreign institutional investors were in the last some days, they are on the sell sides, but there is a continuous buying from the domestic institution that is keeping up the momentum. So all in all, it was a fine day because the markets have run up a lot in the very short term.
And going forward, Mr. Jan, what is your outlook on the market? Do you think markets will be able to survive this kind of bullish turn we saw in the last few days? Or do you think going forward we are awaiting a big correction?
See, big correction are not expected, but I expect that the bullish momentum would continue in the markets. I think the investments, all the in the heavyweights, we are lack of options. That is why we are saying that indices may consolidate for a while, but the investments are now percolating down to mid cap and small cap stocks. That is why we are seeing good amount of action coming in. I mean, the lot of money is coming from the domestic institution, and money is also rotating from the large blue chip stocks like IT stocks, pharma stocks, in which money is drifting away and going into the other baskets where cushion is available, earning momentum is there, and growth is visible. So money is moving out of some of the large cap stocks and finding its way into the mid cap stocks. I think mid cap stocks and small cap stocks would continue to rally, and a bit of volatility would continue to be there, because when huge amount of money is being pumped into a single day, the stock goes up like 15-20%, and then when it suddenly stops, then we see some kind of a pullbacks in these stocks. But overall, the momentum looks still bullish.
And going forward, would you recommend our viewers to invest in certain sectors or stocks? Would you still say that mid cap and small caps are the real, we should be invested in those stocks? What is your recommendation for our viewers?
I think it is better to keep a stock specific, activity in be stock specific in the market. I mean, wherever you see the growth is coming in, the earning prospects are good, the companies are, coming out with the results above the expectation, above the street expectation. We would continue to see the activity in that space. And, mid cap and small cap stocks, I think it is the basket which will continue to be investor favorite. I think investors should not look at the broader indices and should not worry about that if markets are making such high, we should wait for correction. I think the ideal situation would be keep your finger crossed and study the stocks in whichever way you want, in which you want to invest, and stick to it.
And clearly Sensex and Nifty have crossed these benchmarks. Sensex is still above 30,000 mark, while Nifty is above 9,300 mark. So what do you say, when are they going to touch? Like Sensex, when will it touch around 35,000 mark? And Nifty, when will it touch around 10,000 point mark?
I think clearly as I said, the large cap in the large cap basket, you have some doubts in the major baskets like the IT, pharma, which is not helping the indices to move in a very big way. I think the confidence is coming in the banking stocks per se, and some of the baskets which is not letting up the indexes, which will not let up the index move up in a hurry. So I think the investors should keep in mind that the gains would not be that stupendous in the biggies or in the indices. I mean, it will take some time when the earnings would give some kind of cushion, because you have seen the re-rating in terms of earning multiple, but the growth is still not there if you see the whole basket. So I think 35,000 is still way to go, but investment themes are very much there in that.
And what about the global markets? They are mixed currently. What do you make out there? Also keep in mind the particular US tax reform which is coming now, which is on the way. What impact do you see of this particular tax reform in US on India and its overall corporate sector?
I think it was a one-pager note of less than 250 words. It discussed about the lowering of taxes of corporate tax, like going to 15% from 35%, but it lacks the details, how it will impact the federal deficit and what will the government do to make up the revenue losses. I think some clarity is still missing. I think in the days to come we'll have a clarity, but all in all, the markets which were expecting that there would be a tax overall, the blueprint shows the same. And also also investors should keep in mind the liquidity factor, which is keeping up the momentum. Tomorrow I think ECB meeting will be ECB meeting is there. I think one should make a sense of how the ECB is looking at the picture, because they have revised the inflation and growth forecast for the 2018 and 19, but how the things are shaping up, what would they do with respect to the bond purchase program and all. Today Japanese bank also kept the bond purchase program intact. So the liquidity factor is a major factor which one should keep a close eye on.
Well, thank you so much, Mr. Jain, for talking to us and bringing us all these details. As we speak today, it has happened that Sensex is down by 110 points and Nifty down by around 9 points. Now it's time to wrap up the WION Wallet. For more news and updates, stay tuned to WION, and thanks for watching us.